Carl, thanks very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Tech's continued takeoff. NVIDIA hitting a new record high, the biggest IPO of the year coming to market today. We're trading it with the committee. Joining me for the hour, Josh Brown, Malcolm Etheridge, Bill Baruch, and also with us today at Post 9, we're calling him a special committee member today. He's Brad Gerstner. He is here. He's the Altimeter Capital founder and CEO. He was an early investor in Cerebras, which is going public today, and we're awaiting that first trade. I do want to show you what the markets are doing today. New highs for the S&P, new highs for the NASDAQ. The Dow has retaken 50,000 yet again. NASDAQ's on pace for its 7th positive week in a row. It is the first time it's done that since October of 2024. Let's begin with the tech trade for obvious reasons. NVIDIA, for obvious reasons, that new record high today. You did have that Reuters report. The U.S. has cleared the H200 chip sales to 10 firms. May not be entirely new, but we are learning names. And as Jensen Huang is in China, we're wondering what he might come back with. Are they going to be able to sell those chips there as he wants? The street remains optimistic. UBS has taken the price target to 275. Cantor goes to 350. So there is a lot of optimism for a stock that everybody here owns. You get the first shot at this because it's one of your largest positions. Yeah. It's so good to have you in the house. It doesn't happen that often, if ever. So we're so happy to have you. What should we make of what NVIDIA is doing and what Jensen Huang could bring home on this trip?
Well, I mean, the most unusual thing is NVIDIA didn't do anything for 6 months as the rest of the semiconductor trade, really catapulted to new highs. So over 6 months, remember, NVIDIA hit $210 a share about 6.5 months ago, and it was flat over that period of time. Yeah. And so, as our largest holding, it's almost 20% of our overall portfolio, but it's actually been a drag from a performance perspective up until recently. On the March 30th low, I think it hit 170 or 172 bucks a share. And so the catch-up here really hasn't been about China at all, Scott. And by the way, China's de minimis at this point to NVIDIA. They've announced $1 trillion over the course of the next 6 to 8 quarters of demand on Blackwell's and now Vera Rubin's. And so this is a little bit of icing on top of the cake to be able to sell their older H200s, to China. I don't think that's what's moving the stock. They're going to report earnings next week, and I think what's moving the stock is everybody's looking at the entire complex and saying the most important company globally in AI, the best company executing today in AI is NVIDIA. Why is it trading at 14 or 15 times fully tax gap earnings when the rest of the complex is trading much higher?
What's so crazy is this stock sat at 180 for 6 months. Yes. Anyone who wanted it could have had it.
For sure.
And it was at that price, the cheapest multiple on forward earnings you've been able to buy NVIDIA since before ChatGPT. So it's just this astonishing thing where in plain sight, Amazon rallied, Alphabet rallied, AMD, Broadcom, one after another. They just took off, and this thing was just look at this. Is there another one of these that's hiding in plain sight as you look over your current holdings or stocks that you're not in? What do you think is another candidate that we're ignoring right now that has this type of potential?
I love it. I love it. We come on the set. It's like, what is the thing that will go up 40% over
and immediately?
Well, welcome to the market that we're in.
I mean, the fact of the matter is, I'm not smart enough, nor are most retail investors at home to pick it that closely, right? The reason we've been in NVIDIA is because we know they are the market leader. We know that they are the cheapest in the trade. And so we just had to assess at some point in time, numbers would matter. The economic law of gravity here is that if they deliver the returns that we expect that they're going to deliver, then one of two things is going to happen. Either they'll buy back all their own shares because the market won't value them, or the market will buy them. And I think the market at this point in time is saying this doesn't make any sense. But if you said to me, Josh, Brad, what is the catalyst that finally got this thing moving? I couldn't tell you.
Yeah.
Here's my question, though. As we sit here and talk about NVIDIA being at all-time highs, I personally own the stock, so I have a vested interest in it going up and to the right. But as I look at a company like Cerebras getting ready to IPO, what they do is proposing to come for NVIDIA's lunch, right? Like their approach to inference is completely different from what NVIDIA does. It's completely different from the Vera Rubin cluster that fills the rack that we're supposed to get excited about this summer after we hear about what it's going to change and what demand for that looks like. So maybe that explains why the stock had such a hard time blowing past 180, and now we're seeing the excitement as the entire semis space has moved up. But realistically, after earnings, a little bit of air gets let out of that balloon because we have a chance to learn that even if it's not Cerebras, somebody like that is coming for those 80%
Sure,
margins.
but I would just say before Brad answers, I mean, Brad and Jensen Huang himself have been so, bullish and optimistic about what inference is going to mean.
Sure.
2 years ago, you and Jensen were sitting on the podcast together talking about this very issue, how they both saw what this was going to mean. I want you to watch the clip and we can talk on the other side.
Inference is about ready because of chain of reasoning.
Yeah.
Right? It's about
to go up by 1 billion times.
Right. By a million X, by a billion X.
That's right. That's the part that most people haven't completely internalized. This is that industry we were talking about, but
right.
This is the Industrial Revolution.
Right.
My take from that is that in an industrial revolution in industry, there's not going to be one winner, not one big winner. There are going to be many big winners, and this company is going to be right along there, right?
It's so extraordinary watching that. Josh, you and I were just talking. Sometimes these things are hiding in plain sight.
Yeah.
Jensen told us, we knew inference time reasoning was going to change the game. We knew the world was moving to inference. He told you it was going to 1 billion X. And the reality is not many people listen. He went on to buy Grok for $20 billion. Cerebras is going to go public today. These are inference factories, purpose-built chips in order to deliver low latency inference to all the people in the world. And for the folks at home, right, here's the one thing to remember. There is no intelligence. There's no consumer ChatGPT. There's no enterprise intelligence. There's no Claude Code without the production of tokens, right? It's the production and consumption of tokens that is intelligence. And what Cerebras does such a good job at, Grok as well with NVIDIA, is producing very low latency inference tokens. There is room for more than one winner, to your point, Scott. This idea that NVIDIA was going to lose share, you're right, is the thing that capped NVIDIA at $180. But I think the world woke up to the fact that notwithstanding Cerebras' success, notwithstanding Broadcom's success, notwithstanding the success of Trainium and TPU, NVIDIA was still going to sell everything.
There were 5 companies in the S&P 500 that specifically said on their conference calls this earnings season, they can't believe the cost of compute and tokens. Yeah. They are now, that is now becoming a material factor in the profitability of the enterprise users of AI and all of these products. Does a company like Cerebras or many companies like that, is what we're seeing the race to solve that problem so that the price of compute doesn't outrun our willingness to do more and more things with AI?
Right. Remember, in the early phases, 23 and 24, we were solving for pre-training of LLMs. That required a lot of flops, right? We weren't consuming a lot of inference. Now the models themselves to learn, they need to have an inference loop. Agents require inference, and ChatGPT exploded. So the world moved from flops to being able to solve what they call the memory wall, moving KB cache and moving these model weights around on a chip. And the way that Cerebras, remember, we invested in Cerebras 8 to 9 years ago. And the idea was a long shot, that they could do something nobody had ever done and put memory right on this wafer scale chip right next to the compute. They pulled it off and the world moved to them. Now it really matters. They have an unlimited amount of demand for their product. So the challenge for NVIDIA today, the challenge for Cerebras is, can we find the power? Can we find the data centers to stand up all of this in order to support it? The one thing you heard on all those calls, Josh, whether it was Amazon or Google, we are compute constrained. Our revenues would be higher if we weren't compute constrained.
Right.
Anthropic's compute constrained, OpenAI's compute constrained. Cerebras will help solve part of that constraint.
Speaking of demand, you price at 185. The indication is 335. As we await the very first trade, you will see it here. I promise you that. If it happens within the next 50 minutes, you will see it. And we'll discuss it. I want to get back to that in a minute, but the man sitting, quiet to your right is the one who I have to get to today, who has heard all this bullishness about NVIDIA. and I don't think feels any differently, but just trim the stock.
Yeah, I absolutely do not feel any different. This is position management. We love the fact, too, that NVIDIA does not have the CapEx that the other hyperscalers have. This got to be an over 8% position in a portfolio, or right under an 8% position in a portfolio. Scott, you called me out on the show, active and tactical. We trimmed this down to about just over a 6% position. It's been a 50+% move in the semiconductor space just this year alone, in the last month, basically 30%. We're managing risk. So, and then we have a concentrated portfolio. It's better than a 10% position NVIDIA still. So I still love the name, but for us, we've seen this run up, and then we have the Trump-Xi meeting at the time of this trim, Jensen was not joining that party. And then we have next week, we have NVIDIA's earnings. So I think
to try and hit recall.
Not necessarily. I'm happy with the move. Yeah, I mean, when it made sense, with the market moving up, what was that, Tuesday night, and the news changed. But I'm happy. It's still our top position of both portfolios. I'm happy with where we are, and it's been our top position since the back half of 2022. I mean, it's always been right there. So nothing changes in our mind, but we're a little more tactical here across the moves we've made, selling things that haven't had momentum and kind of trying to leaning into the semi space over the past month or two. It gets us in a really great spot. We have about 7% cash. I'm looking forward to, over the next couple of months, to get to work.
So you made the point, as we again wait for the first trade here, indicated far higher than 185 is where it prices above the range. Last check was around 335. So we'll watch for that. But you made the point, as our viewers are watching this, and this is, the first of the really huge AI IPOs to come. It's the biggest since Snowflake. It's the biggest chip one since ARM. They're like, this looks really tasty. For me, you made the point with us when you were on a week or so ago that companies like this, maybe to a degree, not as much as a SpaceX or an Open or an Anthropic, have in a sense already IPO'd in the private market. So temper your expectations as a retail investor.
Yeah, I always try to shoot straight when I come on here. And I see some of these retail investors placing bids, without limits, Josh, at $375, $400, in order to buy Cerebras stock. This is not a get-rich-quick scheme. This is a generational company that I believe, if you're in it for the next 2 or 3 years, will compound much higher, because we're on a generational and transformational wave around AI and inference, and they are delivering the inference factories to the world. With that said, I think you just have to be, cognizant of the moment. You just described, we've had, epic moves in semiconductors. We have an all-time high today, for NVIDIA. So, we got a lot of excitement around here. There'll be plenty of time if you want to be on the train and compounding with Cerebras to buy this stock. It obviously moved up on the pricing, didn't start at 185. We moved it up to 185, which is where it ultimately priced. I think the institutional demand for this stock is probably in the $250 range, $275 range. If you said, Brad, where are you getting excited about buying more of this stock? I would say it's more in that range. That's what I'm hearing from the institutions. I think most of the demand over 300 is frankly retail that, listen, we've locked retail out of all of these great value creation stories. It's a pet peeve of mine. That's why I want to do Invest America accounts, the Trump accounts. Every one of these people should be able to participate in the upside of this compounding. So I understand that they want to get in on the action. And all I would say is caution a little bit today. Don't have uncapped orders. Don't get this thing filled at some astronomically high level and then regret it and be selling it. Don't worry about the quick flip. Like, buy this on a fair price over a reasonable period of time and compound over the course of the next couple of years.
Let's take that then from inference, if you will, to exuberance. Because that is where it feels like the market has taken us, Malcolm, of late. If yesterday, Nebius, and you got Cisco today, which if you're in this space or claiming to be a big player in this space and you have a good earnings day, what used to be special, as I've been saying, like a 14 to 15% move, is now routine. Yeah. It's just become a daily occurrence for many of these companies. So how would you assess the exuberance that some are suggesting exists within this market? This is Cisco's biggest gap up on earnings since 2002.
Which is basically saying anything AI is going up. Anything that looks like it's attached to a data center is going up. But I have a little bit of a hard time understanding the exuberance on the side here that's saying Cerebras should be valued at $400 a share when it IPOs, considering what its technology is proposing to do, right? It basically strips away all the old ways of semiconductor manufacturing that Moore's Law taught us we need to get as many transistors as we can onto one chip and on smaller chips as time goes on, and says basically give me the biggest chip you got and I'm gonna put as many transistors on it as I can, which then means that we don't need as much data center space from a square footage perspective as we've been talking about. We're not talking about the level of power consumption. We're not talking about the amount of fiber optic cables coming from somebody like a Corning. So all of the stocks that are going up and to the right because the amount of money that's being poured into this by the 4 hyperscalers spending $700 billion, Cerebras' success flies in the face of that, right? To an extent, at least. And so I think that the irrational exuberance on one side should be met with the cold water or the rationalization that, like, everything can't go up and to the right forever.
No,
and
but
once something does come along that changes the way we've been doing this for this amount of time, what does that mean for me and the companies that I hold?
Okay, so that plays to, I guess, Josh, the idea that Jim Chanos and I spoke about the other day, the idea that both the earnings and the spending are more cyclical than secular. Right now, you can make the argument this is a fundamentally driven market. Sure, there's probably hype mixed in somewhere. Ed Yardeni has a note today where he says he's tracking the exuberance, to which he says it's impossible not to recognize some of the more ridiculous anecdotes that indicate some folks are getting a bit over-enthusiastic about AI. Companies are switching into AI from entirely unrelated business lines. The stock market's performance is dramatically narrowed, and stock gains are boosting the bottom line for some companies. But at the same time, tech earnings forecasts continue to rise sharply, and at the end of the day, that keeps us in the bullish camp. Well, earnings were up 50% for tech.
Right. So you look at a company. You look at SanDisk. Stock trades from $250 to $1,500, like in a couple of months. Okay, on the surface, it's insanity. But then you look at the projected earnings, and it's like, wait a minute, they're going to 8x their earnings over the next year. So what would you expect the stock to do? So so now the question becomes, all right, but are they going to do that in 27? Are they going to 8x their earnings again in 28? So then the bigger concern becomes lapping these miraculous, some would say, once-in-a-generation CapEx explosions. Can we lap it another year, another 2 years? Because ultimately, the growth rates can stay high, but they can't match what we've just witnessed. That's my trouble with some areas of memory chips, semiconductors, but that doesn't apply to every stock. The semi index right now, even after having gone up 222% in total return from the Liberation Day low, is still selling at 27 times forward. Yep. 27 times forward in arguably the biggest boom for chip demand we've ever seen. It's not 57 times, it's not 100 times. I wish it were. It'd be easier. Just hit the sell button. It's harder because the fundamentals are there.
Well, how about that? Your Taiwan Semi, Brad, for example, says the global chip market is going to hit $1.5 trillion by 2030 because of AI. That's a fundamental fly in the face of that this is all just hype and irrational exuberance driving this whole thing.
I mean, Josh just said, I mean, you have these companies that are growing at extraordinary rates. I mean, you know, in the case of NVIDIA, over 70%. And, you know, they were trading below market multiples, right? This is a radically different situation than what Cisco faced in 2002. And so the people who have been, you know, propagating that myth over the last 2.5 years have missed out on all of this upside. The question you're always asking is, when is too much too much? You know, but if you look at the memory stocks, which we've been very large in for now 2 years, they're still trading at 5 to 6 times earnings. So I'm going to have, you know, the CEO of Micron on the BG2 pod next week, and this is what we're going to talk about. We are fundamentally restructuring these industries. So if you said to me, what is going to be the signal, right? What's the signal that something can go wrong?
I know it already.
Okay, tell me the signal.
Tom Brady launches a data center. Literally take the portfolio flat, take the rest of the year off.
That's scary because
we're not there.
The number of Neo Labs or Neo Clouds that we're being pitched in our venture capital firm every single week.
Any celebrities?
A new Neo Cloud. There are celebrities in these things too, Josh.
From vodka to tequila to data centers. That's where we're going.
But I would just say this, you know, back to the Neo Clouds, and The biggest challenge we have right now is our ability to stand up all the compute. So why might revenues fall short, Scott, for a company like Cerebras or anybody else? Well, if we can't get the compute to run all the things that we promised to run, we will have a problem. And you heard the rumors, have seen the headlines that 30 or 40% of compute now is delayed this year. So keep your eye on power and compute. If delays persist, if we don't get these things stood up, it will roll back onto the revenue and the ROI of the CapEx spend. That could slow the whole trade.
I'll come back to you in just a second. All right, Altimeter's Brad Gerstner is still with us. I said we had some more moves from Bill Baruch. And look, I don't like, it's my pet peeve, I guess. I don't like portfolio management commentary when somebody makes a move, because it's like, no, you know what? Yeah. Like, you guys are portfolio managers. You're managing your portfolios. There are a lot of things that you could be doing around the edges. So I almost feel like it's used as more of an excuse to explain why you make a move. You trimmed Amazon and Alphabet. Now, I'm sure you're going to tell me exactly what I just said, but...
Well, the numbers speak for themselves, what we put up. I mean, we outperform the S&P very well, every year after year. And the reason we do it is because we're able to take some stuff off the top. We're ready to put that cash to work when the market comes back. I'm not calling a top here, but we do see some cyclical highs that come in June from our business cycle analysis and other indicators. But what we're doing in Alphabet and Amazon specifically, I mean, look at it.
What do you mean from your business cycle analysis?
We use a business cycle analysis that overlays with wave analysis. And some of the proprietary indicators we're looking at with breadth, it does line up that we have a pullback. We're also in year 2 of a presidential cycle. That this could be a bit of a, not a blow off, but this rally, I don't know where it's going to extend to, but then we may not do much for the rest of the year, and we may bottom out through the end of the year and look at for a low in February. I want to have some cash, because if we rotate or things like that, I want to be able, I don't want to just make no money for the rest of the year.
No, I understand, but blow off top.
I'm not saying blow off top. I'm saying this could be the top that we kind of
said. This could be a blow off.
I said you said
that.
I don't think I said. I don't know if this is going to be a blow off, but a run up.
No. He's a big boy. He knows what he said.
Yeah. Okay. But I think with our moves here, trimming a little bit around the edges, Amazon and Alphabet, 125% Alphabet's outperformed the S&P over the last 12 months. I mean, I think right here, just from the weighting size, we've kind of gone a little underweight some of these Mag 7 names individually. Doesn't mean that we don't have tech overweight in general. So we're using this as an opportunity to take a little bit off the table, trim around the edges. And then one thing about Amazon that it is breaking out, and it has looked terrific from a charting standpoint. CapEx year over year growth of 59%. I think that's where you're seeing a lot of these multiples come down, is because the spending is there. And then we talked about the constraints around compute and the revenue. I think that's what we're seeing, where some of these, they're still terrific multiples. I think that lays a lot of opportunity. In 2027, I think is going to be on fire.
If I recall, they're the one out of earnings season that didn't raise their CapEx number for the year, right?
It's already over 100%
it's already
of their
so
cash
big.
flow.
I mean, what are they going to do? But still.
Yeah.
What'd you take on the stock?
I would just say these stocks right now are trading extremely well. I don't disagree with Bill at all that there could be a pullback. It's very hard for anyone to, if they're not like laser focused on the market every minute of the day, it's really hard to play that game. I think for most investors, they've waited a long time for Amazon to break out. They've waited a long time for the narrative to change around Jassy, he's untested, they spend too much money. All of that is gone now. Now we're talking about Amazon as the premier place to do Claude workflows, Anthropic, et cetera. And we're talking about it the way I think we should have all this time. So for me, I am not selling any, because I think this is the start of something, not the end.
Could I point out something, though?
Please?
You made a point that they now are spending more than their free cash flow, so they're spending 100% plus. I think that's where this pullback you're talking about comes from. When we really start having an honest conversation about how much debt is being racked up now by the Mag 7, the hyperscalers, the biggest 10, whoever you want to talk about, and a lot of it's being done off book, right, through the SPVs and everything else that we can't directly see on these companies' balance sheets. So at some point, conversation about that starts to get louder and louder, and I think that is where the pullback that you're talking about maybe starts to come from, where October and November of last year, we got a little exhausted with the level of CapEx, and that's when the market said, yeah, I hear you, but $100 billion sounds like too much.
Broadly speaking, we're only 7 to 8% above that October high. Like, the market has done a lot of moving in between, and we are breaking out right now, but I think there's a longer runway. I just think we need to cool off a little bit here.
What are your thoughts on this?
Yeah, we own a lot of Amazon.
I know you have
It's been one of our biggest positions. I mean, listen, I remember the criticism of Amazon back in 2010. They were spending a lot of their free cash flow to build something, and everybody said, why the hell are you wasting all your money on this? That's something. AWS turned out to be one of the greatest gold mines in the history of the world, right? So I'm looking, if they weren't investing this aggressively in AI, I would have a problem with it. They all know that there's going to be extraordinary return on this investment. They're not racking up a lot of debt because they're producing $100 billion of free cash flow a year. I think it's extraordinary that we're financing almost $1 trillion of capex a year to build out the entire AI infrastructure without any money from the U.S. government. Like, we are in the lead globally. You look at China, et cetera, they're having to subsidize this with taxpayer money. We have such profitable companies in this country. We got these incredible, frontier labs and this capex build out going on. So I'm not concerned about that. To me, they're good investments, but we'll see. We just saw the growth rates accelerate in the quarter. 28% at AWS, 39% at Microsoft, 60% at Google Cloud. If we weren't seeing those numbers, Scott, let me tell you this. If Anthropic, why might the market be different this year? Okay, we're up a bunch at this point. If Anthropic had not shown up with the most parabolic revenue numbers in the history of capitalism,
that shocked
everybody.
Even them.
The market may be down, to Josh's point. The only story is AI, and everybody came into the year skeptical as to whether or not those revenues were going to show up. There was a huge wall of worry, and they just posted, or it's reported, $14 billion of incremental annual recurring revenue in the month of April. Nobody's ever seen anything like it. Remember, that's 2 Databricks and 1 Palantir. Okay, in a month that you're adding in terms of annualized revenue.
All right, welcome back. Brad Gerstner, of course, is still with us. So let's talk software for a moment, okay? So we came into this week up 4 straight weeks. Now we're down fractionally this week, so maybe we're giving a little bit of that back. And we've talked on numerous occasions about the peaks and valleys of what's happened here, times where there was opportunity or others where you were like, look, most of the stocks that are down deserve to be down. I don't see it on your top holdings, and maybe that doesn't mean anything. Snowflake, is it still you? You still have that?
We don't have it in the public funds.
You don't?
Nope. And
that's a big deal.
Well, as you know, I still own a lot personally.
Yeah.
As you know, I've been skeptical of software now for 2 years.
Yeah, I know. But
right? We run a long short fund, and so my job is to find both winners and losers. And I've said very clearly, multiple times on the show, starting 18 months ago, software was in the too hard basket. Right? I had Satya on my podcast in December of 24, where he said software was a thin layer on top of a CRUD database. Bill Gurley and I did a podcast, Is Software Dead?, more than 12 months ago. So we've been worried about software. Now, what happened in software, and this is the only place I would take any issue with Orlando Bravo, who's extraordinary and incredible investor. Software stocks, in my view, are not cheap. Software stocks have reverted from a decade-long superior multiple to the market to a market multiple. When you look at free cash flow adjusted for real SBC, when you treat them like all of the other Mag 7, they're basically trading at a market multiple. Now, if you asked me, I would say I can't see out more than 2 or 3 years max in terms of the impact that AI is going to have on software. So if you're asking me to pay a 20x free cash flow multiple on a business that fundamentally is at odds with AI, right? And so they're all trying to agentify their AI stacks, whether you're Salesforce or whether you're ServiceNow. But fundamentally, what AI does is solve a lot of those problems. So for me, I've just put most of those names in the too hard basket. We're all in on the AI trade, both picks and shovels as well as the models, themselves. And so I don't view them as cheap. They're definitely going to be winners, right? We've seen the bounce off the bottom for IGV. I think that you're going to see Snowflake have a great quarter when they report. Databricks is blowing the doors off. We're in another company called ClickHouse, which is in that data infrastructure layer. If you're in the data infrastructure layer, then this token consumption is driving a lot more consumption of your basic services, as Satya talked about. But the closer you are to a point solution, that feels to me like you're on the front of the conveyor belt heading toward the guillotine. And to me, it's just too hard.
And to be clear, what they do, obviously, is way more focused on the private software companies.
Correct.
Where there are infinite numbers of software companies relative to the publicly traded ones. That's more of what I think he's talking about than what is a member of the IGV.
But you looked at what these guys were buying just 8 or 9 months ago. The multiples they were paying for those software companies they were just way too high. They were way too high. We can't pay that anymore given this level of uncertainty. The discount rates have gone up forever. This is not a once in a moment. Discount rates have gone up forever on software, and the inverse of that is multiples have come down.
Some more details on this awaited Cerebras IPO. Christina Partsenevelos is at the NASDAQ. What do we learn?
Well, Scott, there is excitement because right now, according to what I'm hearing from the NASDAQ, there's 45 buyers for every one seller. The price is at $350 right now. The reason they're not opening is that Morgan Stanley feels that price is a little too high. Normally, when you have an offering, so for Cerebras, it was 30 million shares yesterday at $185. They just want to get 10% of that out into the market, so roughly 3 million shares. Right now, they're at least at 3.6 million that have been sold. But that price is still too high for them. They want to just find the next threshold, which is why this could take another 25 minutes. But it really speaks to the demand for this company today. Scott?
Yeah, good stuff. Good color. Christina, thanks. You got a comment on that?
I agree with her. I'm hearing it could be within the next 10 minutes. My bet is we're going to get it done on this show. We're going to open Cerebras. Going to be one of the most important IPOs, in the last 2 years. We're going to open it on the show.
All right, we'll see. We'll see. The clock's ticking. It's got about 2.5 minutes to go in the show. I don't know if we're going to get your trade before we go, but how should we be thinking about now that we're going to get this IPO today, which is going to be the biggest, as we said, since Snowflake. Pretty good test case for the market, and it looks to be an explosive winner.
Yes.
Between SpaceX, Open, Anthropic, how are you thinking about it? What would you tell our viewers to think about?
I mean, listen, today I want to celebrate Cerebras. It's my pick. If I can, Andrew, Gary, Sean, JP, Michael, the founders of this company, this is what makes America great. We have a breakthrough chip. It was a long shot deal. We had the risk capital that stepped in, and now it's going to go public today. I'm hearing in less than 2 minutes at over $100 billion. Right? An extraordinary, value creation. But if you know this team, Scott, you know this founder, you know Andrew Feldman, he's an absolute warrior, and they're intent on getting to $500 billion and then $1 trillion. They believe the wave is this important. Their product strategy is really on point for the age of inference. And so I would say today at Cerebras is going to be extraordinary for the markets, and I'm happy we get retail investors back involved in the AI trade.
Yeah, it's extraordinary too, the kind of risk to some degree that people like you take. You said you were in this 8 or 9 years ago, as early as you got into a story as a believer, and now you get to realize all of those hopes, which we expect to happen momentarily. Could happen in the next minute. If not, it will surely happen in the early part of the next show, and you'll see the very first trade. Thank you so much for being here.
It's great to be here.
It's been a treat to have you on set with us as we walk up to the biggest IPO of the year, no doubt, and the biggest since Snowflake, the biggest chip one since ARM, and a really good precursor to what we expect will be blockbuster IPOs from SpaceX, OpenAI, and Anthropic whenever they hit the market. What do you got as your final trade?
Lilly, we've been leaning into it. They've been leveraging their balance sheet, great earnings report, and it is rallying nice.
Well, you bought more.
Don't
bury the lead. I just set you up.
Oh, we bought more. That trimming that we've been making, we're taking it into where the momentum we see also kind of diversifying across the board. That earnings report they had, this reacted really well.
I appreciate you. What do you got?
I'm going Dominion Energy. We've been talking about the AI trade raising all boats. Energy's included in that.
JB?
I love this new storyline. Apple cheating on OpenAI with Gemini. This was always meant. Apple and Google work really well together. It was always meant to be. Let's watch for what happens next.
All right. First trade. There it is. Well, is that? Yes, it does. Begin trading. Look at that. So we didn't quite get it before the very end, but I'm going to toss it over to Kelly for the exchange. And Kel, you just take it from here as we watch this trade.
Hang on a second. Stay right there. You and Brad, do you mind, Scott? Can you guys stay there for 1 second?
No, I appreciate that.
We were able to bring back Brad Gerstner and Scott Wapner. Brad, appreciate it very much. Love your reaction here. A remarkable moment.
Truly. I mean, listen. Everybody's getting caught up in the heat of the moment. We have a supply-demand imbalance here. The company's going public at over $100 billion. You've seen the IPO price, that's gotten walked up. I think the reason for that is people understand the long-term excitement. We're in the age of inference. You have to produce tokens in order to get intelligence. This is one of the best companies at producing tokens at scale and fast tokens by removing that memory wall, if you will, that challenges NVIDIA. This is going to be all tides rising. Right now, I think some of this exuberance, I get worried about, Scott, like I said on the show, with retail investors. I would not be YOLOing into this thing at $400. I see it's okay. It's trading down a little bit now at $325. That feels better from a retail perspective. I imagine you'll see institutional investors begin to move in, at or around these levels.
Would you say that you couldn't have timed this IPO any better for the moment that we appear to be in, right? It's all about AI. Some have suggested it's literally the only trade in the market. Kel, you have to think about that kind of thing, right? The bankers, they timed it. The management team, they timed it perfectly to capture a moment in time. And they end up being the first, as Kelly was saying, Brad, the first of the real big AI IPOs of many more to come.
For sure. I mean, listen, 18 months ago, we pulled this IPO, if you remember, right? The Biden administration would not allow this to move forward because of CFIUS, right? Remember, the UAE is an incredible and important partner here to Cerebras. They're also building out Stargate in the UAE, which is super important for OpenAI, Anthropic, and others. And so we couldn't even get it public 18 months ago. Today, you see how much has changed. When Jensen said inference is going to 1 billion X, as we showed in that clip, that was the tell. The whole world shifted from pre-training and flops to inference and overcoming that memory wall. That's what Cerebras does so well. This is going to be a long-term story with these guys. I'm telling you, they're business builders. Their product pipeline is chock full. I'm not trying to talk the stock up from the prices it's trading at today. I've already warned retail investors, but this is going to be something that plays out over the next decade, not out over the next 10 days.
I get the feeling you're almost trying to talk it down a little bit because it's in uncomfortable air. It gets a little harder to breathe, Kel. Kelly, if this is a test case for what's to come in some degree, it's look out above, not below, because there's just so much excitement about all of this. Anything AI related, as you know and cover every day on your own program,
it's a great line.
Just has been straight up to the right.
I would quickly ask Brad, but I know we have to let you go. But Brad, who is next? Everyone's talking about SpaceX, but I'm talking about now that this has happened. Does it actually does it hasten an OpenAI, an Anthropic? I'm just trying to fill in the blanks here. Those names are already so mature, but is there anyone else early stage that this IPO frenzy could now kind of draw into the public space?
Well, listen, kudos to Andrew and Bob and team for having the courage to go first, right? They didn't know in the middle of an Iran war whether or not, the markets were going to be sitting where they're sitting. They had the courage to step out now, just like they did, 18 months ago. That will open the way for not just the mega caps like SpaceX, Anthropic, and OpenAI, which are all coming, right? But it's also going to open the door for us to encourage some of the smaller and medium-sized companies. As Scott knows, I want to see retail investors in this country get more access to these things. And I think there are going to be more coming as a result of Cerebras having the successful IPO.
You don't think some of those smaller companies are afraid to come out and swim in a pool with whales? I just wonder if they're being discouraged actually to come to market and being crowded out rather than encouraged to go public in the wake of all of this.
My hunch is today in Silicon Valley, my portfolio companies are all saying, hey, we have a shot to do this. You don't have to be the biggest. You don't have to be $1 trillion company in order to go out. We can get access to cheap and durable capital. They all need capital to continue to scale and grow their businesses. This is a great example. It is a textbook play. Kudos also to Morgan Stanley for their leadership in getting this thing priced. This is not easy stuff. The people who wanted allocations in this IPO greatly exceeded, 25 times oversubscribed. So I think this is a good indicator of what's to come. The next one's going to be SpaceX, and everybody wants a piece of Elon.
Yeah, Kelly, if you'd allow me one more, I just wanted Brad to just quickly go over the lockup structure on this because it's unique. Yeah. It's unique. It's not normal for what we're traditionally used to seeing, correct? And that's for a reason.
Correct. So, in a traditional IPO, we had what we called a 6-month cliff lockup, where 6 months after the IPO, investors like ourselves, insiders, would be able to sell. The problem with that is, as these companies get bigger and bigger, it has this massive overhang, and that overhang gets arbitraged by quant firms and other folks. You don't want to have all that supply coming to market all at once. This one is very different. In fact, I'll post a chart on Twitter as to what the lockup looks like, because it's a little complex. But basically, it's a rolling lock over a course of 6 months. It's called a dribble lock, so they'll be able to dribble out shares. Early employees or employees in the business, I think, can start selling shares within the next couple of days. Investors and others over the course after their first earnings report, which I think will be 5, 6, 7 weeks from now. And then it will be dribbled out over 6 months. So it's like 15% release, 15% release, and then 6% each few weeks after that. So you're not going to have a big overhang on this where all that supply splashes at once. And the other thing it does, Scott, this is clearly supply constrained. It's going to get supply into the market faster.
Kel, thanks for letting us hang with you for a little bit.
Oh, my gosh. This is an honor. Truly. Thank you both. Really, really appreciate it. Perfect timing here, right at the turn of the hour. Love getting your reaction. Scott, thanks. Brad, thanks very much for those details on Cerebras.